the 2023 financial year, Argo Infrastructure delivered a solid performance and a record high annual dividend. Argo Infrastructure's full-year profit was $9.6 million. This was lower than the prior year, largely reflecting the decline in the market value of Argo Infrastructure's investment portfolio, in line with the broader asset class. Accounting standards require that changes in the value of the portfolio be treated as a profit or loss for ALI. As a result, reported profit can fluctuate significantly from one year to the next and may not reflect the level of income generated by the portfolio, as was the case this year. Income received from companies in the investment portfolio this year increased by 22.5% to $14.4 million. It is this income, together with realised capital gains and the tax that we pay on them, that enables us to pay franked dividends. In August, the board was pleased to declare a fully franked final dividend of 4.5 cents per share. Together with the interim dividend of 4 cents per share, annual fully franked dividends increased to 8.5 cents per share, marking a record high for the company. Total dividends paid to our shareholders since the company was founded now total 48.75 cents per share. Furthermore, the final dividend marks Argo Infrastructure's 11th consecutive fully franked dividend out of the 16 dividends paid since inception. Global infrastructures have favoured growth-style investments, particularly technology stocks, over the last year. And as a result, global listed infrastructure has lagged the strong performance of broader global equities. Over the 12 months to 30 September 2023, Argo Infrastructure's portfolio return before fees and in Australian dollar terms was flat. This is in line with the performance of the benchmark infrastructure index, which was similarly flat, increasing by just 0.1% in Australian dollar terms over the same period. Argo Infrastructure's Managing Director, Jason Beddow, and Cohen & Steers Portfolio Manager, Ben Morton, will further discuss the factors contributing to the subdued performance of global listed infrastructure last year, particularly relative to broader global equities. The discount of Argo Infrastructure's share price relative to its net tangible assets backing has narrowed over recent years and on some occasions traded at a premium. Over the past 6 months, however, this discount has widened again to be in the high single-digit range. Over this period, all listed investment companies have experienced this phenomenon, which has coincided with the rapid rise in interest rates, making term deposits viable investments once again. We recently conducted an online survey of our shareholders. The purpose was to better understand Argo Infrastructure shareholders. No, let me go back. Sorry, I've turned a page too many. I want to make a very important point here. So, we've had a widening of our discount of NTA to share price to NTA, and that's also coincided with subdued performance of global infrastructure. And as a result, we acknowledge that the performance of the NTA and share price has been disappointing, largely reflecting the overall weakness of the asset class. However, independent research from Lonsec recently published its 2023 report on Argo Infrastructure, and I'm pleased to advise you that Lonsec reaffirmed its recommended rating for the third consecutive year. In addition, Independent Investment Research, or IIR, another research house, has maintained its recommended rating for the company. I now do turn to those shareholder survey results. We recently conducted an online survey of our shareholders. The purpose was to better understand Argo Infrastructure shareholders and how we can improve our communication and engagement. We would like to share the key findings of the survey with you today. 60% of respondents have been Argo Infrastructure shareholders since the company's inception in 2015. More than 3/4 have been shareholders for 3 or more years. The top 3 reasons why shareholders own Argo Infrastructure shares are: firstly, seeking global diversification for their investment portfolio. Secondly, gaining exposure to infrastructure. And thirdly, receiving fully franked dividends. 70% of respondents rated our overall shareholder engagement and communication as very good and excellent, or excellent, and 97% described the quantity of information provided as about right. Emails are by far the most popular form of communication, with 86% of shareholders nominating emails as their preferred method of accessing information about the company. And importantly, 84% of our shareholders would recommend Argo Infrastructure to other investors. I want to thank all of those who completed the survey. If you did not have an opportunity to participate, or you have further comments or suggestions, we welcome your feedback. You can be in touch with the team at Argo Infrastructure at any time, and contact details will be provided at the end of today's session. I now turn to the outlook. While the higher for longer interest rate environment is a headwind for global infrastructure stocks currently, the outlook for the asset class over the longer term is supported by several factors. Some of the structural changes occurring in the global economy are a boon for infrastructure and necessitate major investment in projects across the world. For example, the rapid digitisation of society will require more supporting infrastructure such as data centres and communication towers. Similarly, the enormous task of transitioning to net zero emissions will see the world's largest economies ploughing large sums into energy infrastructure. We're seeing this play out in the United States with the Inflation Reduction Act mandating massive government expenditure in this space. In addition, the urbanisation of populations across emerging economies will require investment in new projects across the full spectrum of infrastructure subsectors, from water utilities to airports. With just a handful of Australian infrastructure stocks remaining on the ASX, we offer investors broader access to these and other long-term global infrastructure trends. Furthermore, we remain the only Australian listed company that provides exposure to the large and diverse universe of global infrastructure stocks. Argo Infrastructure has established a track record of providing diversification benefits to investors in Australian equities, and we remain focused on providing shareholders with a steady and sustainable stream of fully franked dividend income. I can assure shareholders that Argo Infrastructure remains in a strong financial position, with approximately 400 million of assets and no debt. I'd like to conclude my remarks today by thanking our Managing Director, Jason Beddow, and the team for their ongoing hard work, and also like to thank Ben Morton and the team at Cohen & Steers. And I also wish to acknowledge the hard work and contribution from my fellow board members during the course of the year. And finally, on behalf of the board, I warmly welcome and thank our loyal shareholders, and to our new shareholders, welcome to Argo. I now ask Jason to provide his Managing Director's address. Thank you.